Hi everybody, this is Lara with your end of the week video analysis for the US oil spot market for the trading week ending Friday 31st of May. The next midterm target for this downward trend is now calculated at 46.66 and the final target remains the same at 10.72. Oil is behaving pretty much exactly as the wave count and analysis is expecting it to. It's moving strongly lower. This is the bigger picture. My Elliott wave count sees a 5 steps forward complete here and a 3 steps back incomplete. To try and label the 3 steps back complete here means that a new bull market for oil needs to start with a 5-step forward movement. And as you can see, it does not subdivide well as a 5, but this movement here subdivides very well as a 3. And so with a 3-wave structure in an upward direction, that's indicating that's a counter-trend movement, which tells us that the bigger picture still sees oil within a bear market. And so I am labelling this a second wave at supercycle degree as a double zigzag. Double zigzags are actually fairly common corrective structures. The first zigzag in the double is labelled cycle wave W. The double is joined by a 3 in the opposite direction labelled X, which also subdivides as a zigzag, and that is by an extremely wide margin, the most common structure for X waves. This wave count is now expecting a second zigzag to be labelled cycle wave Y to achieve its purpose of deepening the correction to move below the end of cycle W. The target would see that purpose achieved. The target is for primary C to reach 1.618, the length of primary A. Within the zigzag of cycle Y, primary A may be complete here, primary B may be complete here. It could continue further though, and if it does, it may not move beyond the start of primary A. This is the final invalidation point for this wave count. Let's take a look now at the weekly chart. We're going to focus on this movement. From this high here at 76.9, there is a 5 steps forward, 3 steps back, 5 steps forward. Forward is downward if this trend is down. That's your basic Elliott wave pattern, 5 steps followed by 3. And so I am expecting primary wave C to subdivide as a 5-wave structure. There are only 2 Elliott wave possibilities for C waves within zigzags. Either an impulse, which is by a wide margin the most common structure, so that's what I'll expect, or an ending diagonal, which in this case would be the classic equivalent of a falling wedge pattern. Ending diagonals for C waves are not nearly as common. I'll only consider and chart that if overlapping suggests I should. So far it's unfolding as expected. It looks like an impulse. So far, intermediate wave 1 may be incomplete. Now I may need to move the degree of labelling here up 1 degree. I will also consider that in coming weeks, just a word of caution there. Intermediate wave 1 may be subdividing as an impulse so far with 1 and 2 complete. 3 has moved well below the end of 1. It may be ending in another couple of weeks or so. And then 4 may not move into wave 1 price territory above the invalidation point. Let's take a look now at the daily chart level from the end of primary B. Actually, before we go there, draw this channel around cycle wave Y from the start of primary A to the end of primary B, and then place a parallel copy on the end of primary A. The upper edge may show where extreme bounces find final resistance, and the lower edge may show where price may find support, and that might be the end of the movement. Although sometimes C waves, because they are equivalent to third waves, can exhibit strength and can overshoot these channels. That's also a possibility. Okay, let's look at the daily chart now from B high up here. So far, unfolding as an impulse for intermediate wave 1, 1, 2, 3, 4, 1, 2, 3 to end, and then 4 and 5 to end of 5 steps down for intermediate wave 1. Minor wave 3 within it may only subdivide as an impulse. So far, minute waves 1 and 2 may be complete. Minute wave 3 has moved below the end of 1 meeting a core Elliott wave rule. When it arrives, minute wave 4 may not move into wave 1 price territory above the short-term invalidation point. Draw an acceleration channel around this downward movement from the end of 1 to the latest low. Place a parallel copy on the end of 2. As price keeps falling, keep redrawing that channel, and when minor wave 3 is over, that will then be an Elliott channel and may show us where a correction for minor 4 may find resistance at the upper edge. The first target for minor 3 to reach 1.618, the length of minor 1, has been met and slightly exceeded. The structure of minor 3 looks incomplete, and so I am calculating a new target based on the next Elliott wave ratio in the sequence. Okay, let's take a look at classic technical analysis now. Please excuse the noise from outside coming in here. If that bothers you, I'm sorry. There's nothing I can do about that. The monthly chart now has a complete month for May that we can have a look at, and it's a very strong bearish engulfing pattern coming after a few months of upward movement and a bearish long upper wick here. This is the strongest bearish candlestick reversal pattern that we can see. It has good strong support from volume pushing price lower. And so at this time frame, this strongly supports the Elliott wave count. Next support lines here on the monthly chart are identified about 42 and 38. RSI is well in neutral territory. There is plenty of room for price to fall. MACD is bearish but not full bore bearish yet. There's some bullish divergence here between price and on-balance volume, but I give this less weight than I do with on-balance volume's behaviour with trend lines. But there's no new range yet for on-balance volume to show a breach of support or resistance. At the weekly chart level, 2 strong weeks come with strong support from volume actively pushing price lower. As price was rising, ATR was declining. Now price is falling. ATR is again possibly beginning to show some increase. ATR tends to increase when a trend moves in the direction of the trend and tends to decline in counter-trend movements. It increased as price fell here, and it declined as price rose here. ATR is telling us also that it looks like, at this stage, the trend for oil is down. ADX now agrees. The negative DX line is crossed above the positive. ADX is rising. It is above 15. It tells us a new downward trend in its early stages is beginning. On-balance volume is at support, but this is quite weak support because it only has been just able to be drawn across 2 price swing highs. A breach of this support would be a weak bullish signal. This also may initiate a small bounce here before the line is breached. RSI is neutral, room for price to keep going lower. It can reach oversold and remain there for a while, and so reaching oversold on its own is not an indication that the trend must be over. And stochastics is still in neutral territory. That's all from me with your oil analysis this week, and I hope that all of our members are having an absolutely fabulous weekend.